So, how's everybody doing? It's been an interesting couple of weeks. I've made a few trades. We've got a bunch of events coming up. We're getting towards the end of the year. This is the most important part of the year. We've had a lot go on in the rate space. We've had a lot go on in the credit space. We've had a lot go on in the stock market. We've got some economic data. Let's take a look at the futures real quick, see how we're doing. They're up a little bit, but not that much. It's still within the range that it was in when it closed. So nothing really big. I mean, VWAP moved up to it. But we've had basically a pump ever since that Jerome Powell speech. I know you can't see it, but there are green candles here. Let me see if I can zoom in. This is showing it all. I don't get why it's not showing that. I'm going to have to look at that. That's just the weirdest thing. So, but whatever. I guess we'll say the green is phantom, and it's the bears hacking us because they're jealous that it keeps going up, and they want to make their gains. They're tired of losing out every single time, every single day, every single week. They think it's going to go down because it goes down for a day, and then they get squashed again. So I've had a few interesting trades. I right before the Jerome Powell speech, man, I really wish I hadn't done this. I let go of some contracts because I expected him to push the markets down a little bit. I mean, if we look at the actual market right now, so let me go. We know the market's up. We know the market's probably going to continue until we get something. You're doing so, boss, right now. That's good. Good. I mean, you were short for a lot of the year, so I'm guessing you probably made out pretty well. Been a long time. Yeah, it's been a little while since you've been in. It's good to have you back. It's been an interesting. I don't know if you caught any of the Fed streams that I did, but I made 4 in a row. I did well every single time, and then I got crushed on that last one live. That one was pretty bad. I got murdered for like 30% of my entire free cash. I was up a little bit too, and I kind of had this feeling in my gut like this doesn't seem right because I missed most of the pump on that day, and I tried to get a second leg of the pump, which wasn't a good idea, but I got crushed and then came back on the CPI report. I kind of figured that the CPI was going to be better than people expected based on all the economic data that was coming out, based on all the layoffs, based on what was going on. So I bet to the upward side on the CPI and ended up doing really well. I shorted some inverse SPY stuff. Let's see, I had Gap. Oh, man, I had a few contracts of GPS. That was great. I mean, what was funny about that is, I mean, they had exposure to the Kanye West thing, and they still did well. So it was like I got out of that, right? I kind of wish I still had some more, but there was that. I had Alibaba. I got FedEx. Like I got all these different trades, and they all did really well because I was expecting it to pump. I wasn't expecting it to pump quite so much when Jerome Powell spoke. So part of it was a squeeze, but the rest of it was just the fact that they're not fully listening to what he's saying. He should have come out and tried to tamp things down a little bit, but he was kind of dovish. So what do we got here? Thought 39.20 was the top. Didn't go well with the CPI. Then I got effed. I know 3,500 is going to rally, but through 3,900 the top. Yeah, so let's see. That's what I wanted to look at here. So just real quick before we get into that. So this is what we're looking at with the entire year so far. So we are down. We've got these peaks that keep coming up, lower highs each time, and we're kind of at another one. And the question is, are we going to get past that? Okay, so let's see. You were saying you thought 39.20 was the top. Didn't go well with the CPI. You were wrong. Massive liquidity for the banks. Well, we haven't really had anything that's going to flip it around so far. So there's your targets. Oh, man, you've got even more lines now. Yes. All right, getting some technical analysis. Can I zoom in on this at all? So you've got a bunch of targets right here. Matt, look at these channels. What are these channels? So you've got just one channel going down. You're going on the 2-hour right here. This is the S&P 500, contract for differences. So you've got this big channel right here. You've got a channel coming up from this little bottom section here. We're kind of at the middle of it. Well, if you're going with technical analysis, you could look at stuff like that, but you got to look at what's going on in the market right now. We had a good CPI, and we also had Jerome Powell come out and not be as hawkish as we thought. So things are bound to rally when that happens, regardless of what the technicals say. This is actually a time to really pay attention to the fundamentals because what we're getting out of this is what the market is going to do. Like they're listening to the Fed more than anything else right now. Technicals are great when there's nothing going on, and they're also great just as a guideline. But when you have such strong fundamental reactions, you have to pay attention to those as well. In fact, you have to pay attention to those more so than the technicals. So you can look at the technicals and think, okay, this could be an area to do some stuff, but you also have to say, has the market given me a reason to switch directions yet? And so far, it hasn't. So far, the market is still going up because that CPI was good. It's telling you the Fed is on track. And when Jerome Powell came out and said everything that he said the other day, he was more hawkish than the market gave it credit for. And some of that jump was a squeeze, but he was still dovish enough that most investors felt fine putting more money into the market. Until we get something that tells us that the Fed's actions are not working, we're going to have an upward trend, either a sideways or an upward trend, most likely. Now, I'm not saying we won't have a downtrend or we can't have a downtrend. That's also possible. I mean, any new information could bring us down. My guess is if we get a bad CPI, which is coming up the day before the Fed meeting, of course, so that's going to be a crazy week, that will be what will crash us, because everybody's thinking about inflation. That's the main thing. Like, traders and people that are in the markets are thinking about all these different points, economic data, etc. But the average person is not. The average person is thinking about inflation. They're thinking, all right, if inflation isn't under control, then I can put money into the stock market because these companies are going to be able to get the things that they need reasonably priced. Consumers are going to be able to buy more because it's not too much. So the stock should continue. That's what the average person is thinking. Like, the people that aren't paying attention to, was it Ichimoku clouds and Bollinger Bands and all this kind of stuff. So what do you got down here? When the market was at 3,500, I thought we rallied at 39 area, then exit there and shorted all in. All in. Oh, dude, what are you doing with the all in? Never go all in. That's like one of my big things. Like, no matter how sure I am, I just never go all in. Like, if I was going to die or something, like I knew I was going to die in 3 days, then yeah, I'd go all in on some stuff just for the crap of it. But if you're going to live, then you really don't ever want to go all in. So, you redeemed bearish because you were thinking bearish. We still could get bearish. I don't know. But it does look like you've got some channels going up. It's still, even your technical analysis looks like we could go up to this little median line right here. Let's see, what does that say? 3,800, around there. At the top of that channel comes in about 38.5. Which I think would be a decent place. You've also got some tops up here. Like, if everything came back up, first of all, we've got this plays in the way, so it's going to be annoying. But the previous peak, that's going to have some resistance. So let me go to the SPY real quick, because I actually drew some lines. I got technical for once. You know me talking crap about technical, and then I get all technical. So basically, I put some lines everywhere there's a volume peak. So I wanted to make sure that I could see the areas that were going to be difficult. So we've got right here a peak. Right? So there should be a line right here. We're intersecting the 50-day moving average, the 100-day moving average. We've got this is like a half standard deviation up, which we've just passed. We've got a high volume level right here. We're getting close to a peak. If you look, there's actually, that lines up with this one right here. So it's had resistance at this point before. There was a little resistance here. Not a whole lot, but it's something that shows you that this area is going to be a little bit tougher than the rest. So if there's an inflection point without any other news or with very little news, this would be it. So the caliber of the news is going to matter. If there's something really big, then it's just going to tank right away. If it's something kind of minor, it could drift up or it could drift sideways before going down. But my guess is until we get anything, it's just going to keep kind of going up. We've had good news that's moved the market, so being extremely bearish on it is rough right now. I do think that it's going to have to go down eventually, because the reality of all the stuff that's going on is eventually going to show itself, right? We've got a bunch of layoffs. There's companies that are they're not getting as many orders in the factory, so they have too many factories open and not enough orders. Eventually, they're going to have to shut those factories down, which means more layoffs. I don't know if it's going to drop extremely or if it's going to drop a little bit or if it's just going to keep going. I really don't know. This is an interesting time. So let's see, Bryce. Now you're caught at 3,900 really bad, and you expect this. Oh, we've got another one. Oh my God, dude. What are you doing with all this? I can't even see what's going on. Look at this. This is insane. How can you tell what's going on? So this line right here, this median line, has actually been respected pretty well, though. I mean, on this uptrend that we've had. So this is, I'm assuming, okay, 1 hour. That makes sense. Every time it comes to this little median of whatever channel this is, because I have no idea what channel this white line is even a part of right now. But it has been respecting that median line for whatever channel this is. All these other ones are kind of weak. I mean, you can't pay attention to all. This is too much, all right? Like, I know technical analysis can be helpful and stuff like that. You can really get lost in it. And when you're getting crushed, like you're getting crushed right now, you're saying it's really easy to try to find every little piece of it, but it's going to be rough for a while, all right? Until we get something that turns it around. If we get something that turns it around, it's going to be rough. And I mean, you could try to play the technical analysis game, but really you should be looking at trying to protect what you have, because you're probably going to be right eventually. I mean, I can't guarantee that. Like, I really don't know. I'm just some guy. I kind of guess at this. But right now, I don't see any reason for it to drop without new news. So I would just try to protect yourself as much as you possibly can, because this is going to be a rough ride until something happens, if something happens. And if something does happen, the likely point is going to be the CPI. I mean, we've got the PPI next week, I believe on the 9th. I have to check my notes again. So that's a big one. We've got consumer sentiment coming up, which is like, that kind of just tells you how people are feeling about the market. I don't worry about that one, but it is kind of nice to see when people are extremely bearish, when that thing goes way under the estimates, we usually end up having a bounce. So I do like to pay attention to it, but I think people are a little bit too bullish on things to have a full reversal. We keep having these little squeezes like this stuff right here, these big jumps. In fact, let me get out of this so we can take a look at my chart that doesn't have a whole bunch of stuff all over it. I mean, I do have some. I have some moving averages. I got the standard deviation channels and the volume profile. I like those ones, but it's hard to see with everything else. So right now we're going to have the CPI. We've had this nice uptrend, and this has been going on for a couple of months now because these are weekly candles. So basically every week we've been up. And what I was saying last time is the shorts, if you did the short, the first red day strategy throughout the year, you're doing pretty well, right? Because anytime you had a red day, it was like, oh, boom, or this, I'm saying a red week in this case. You did pretty well. See, we had some green, you short the red, boom, you're good. You got a little, this one you got blown out because of a Fed meeting. But if you just read, you got this first red day here, you were good. First red day here, you were good. But then when you get down to here, it starts to get a little choppy. First red day, you get blown out. First red day, you get blown out. First red day, you get really blown out. And then we go back to it. First red day, you're doing well. First red day, you're doing well. Now we're back in the trend, or in the trend of first red day not doing so well. Or I should say first red week. And let's see, what did you say here? This is the rally of the banks. They pumped the freaking banks in 2008, so it won't happen like that. Yeah, we're still riding the rally from 2008. I mean, they kind of rewrote the entire system at that point. They said, all right, we're just going to dump ridiculous amounts of money in to try to plug these holes. It's like you've got massive leaks in your boat, and the way you're filling it is just dumping more liquid in there. So that's what we got. So the rally from 2008 is already unparalleled. Oh, yeah. We've never had a rally to that degree. In fact, let me back out a little bit so we can take a look at it. So here we go. We've got the dot-com pump. We've got the 2008 crash right here. And then this is where they really went crazy with all the money, the helicopter money and the quantitative easing and such. And bam, we took off. And then what happened, though, is we supercharged it during the pandemic. So this already was pretty insane. But I mean, this is the most insane ever right here. If you look at like going from, the 2000 mark all the way up to the 4000 mark in the matter of like a year and a half or even less than that. So that is insane. This is the biggest jump we've ever had. These are weekly candles. So this is really telling you something. So here's my thought on that. We've thrown so much money into this. There's just so much volume of cash that you can't escape it. Like there's such a high volume of cash that you can't escape the tide. I mean, the cash is basically the tide that's lifting it up. So in the long run, we're going to probably continue to go up until the system blows up. This thing is just going to keep inflating. Like the reason they're doing what they're doing is because they know this insane trend that we're having right now is going to continue. If you look at this, part of this rally is people not believing it. So like the reason you got short is the same reason a lot of people got short. Let's see, you're saying, since you can buy a stock at the tip of the finger with the internet, the rise of insane, it became a casino now. No matter how bad the apocalypse gets, people are insane. They will go in the market, long, short, doesn't matter. It's liquidity for the market. Yes, exactly. No matter what's going on, this is going to continue. And see, this is why I don't want to be short, right? This is why, I mean, I was getting super long in here. This was great because there was a bunch of people that were long that needed to get out, and there were a bunch of shorts that needed to take profits. So we had all that mess in here, plus a Fed meeting and a bunch of earnings. And we had economic projections because the September meeting was where they, the Fed gave their economic projections of where they think interest rates are going to be for the next couple of years. And then the traders were reacting to that and basing their trades, basing their investments on that. Thinking like, okay, what is the value of the market based on what all the companies think they're going to be making put together on an average? They thought, okay, there's some level in there that works. And right now it's too low. So they were going up. And of course, the shorts, for example, like Michael Burry, if you're a short, I highly recommend not listening to Michael Burry because he's intense right now. He's ridiculously short, and he might be right. I really don't know. I mean, the guy's got insane. He's gotten rid of all of his I guess publicly he has. He's gotten rid of all of his positions except Geo Group, which is a prison. Like he really thinks stuff is about to go down. Like things are going to be terrible, and they might. But if history tells us that's not the case, history says it's more likely that we're not going to have that than we are going to have that. I mean, you never really know. I mean, I do think things are going to get worse than some people think because we are going to have some fallout from all this economic data. There are a lot of layoffs going on. There are also a lot of new job opportunities being taken away, which is different. So that's a way that people don't lose jobs, but there just aren't as many new jobs for people to get. So that right there can help with the wage, because wage is actually one of the big drivers now. It didn't used to be. Now that we've kind of cleared up a lot of the shipping mess and things are starting to flow a little bit better than they used to, we just have a lot of stuff being made. We have a lot of services being rendered. We need a lot of people to do that. And these companies hired so many people. From the pandemic all the way in today, there was a bunch of hiring going on. Now it's slowing, but it's still going on. Unemployment is low, and that's another thing. We're going to get an unemployment number soon. Spending is still decent. Reserves are still better than we thought. We thought that reserves weren't going to be very good, but people still have some stuff in their savings. It's down. Yes, it is down. It's down to like 2.3% or something, but it's still more than we thought based on the credit card thing. We saw a huge uptick in credit card debt, which usually means that people don't have as much in their savings. And that is true. They have less right now, so they are taking out more debt. But they still have more savings than people were expecting, which is why I think one of the other reasons why the market's going up right here. So what are you saying right here? We're going to go lower. It's not the bottom, but they're going to squeeze to 4,200. The spread between the 10-year and the 1-year yields moved down to 1.18 last week, the most inverted curve since September 1981. The last 8 recessions in the U.S. were all preceded by an inversion in this yield curve relationship. Yeah, so it's pretty much every single time the yield curve inverts, we do have some downward motion. Now, the difference between that and what normally happens is that yield curve likes to invert when we're still on an uptrend, or maybe we're just starting a downtrend. But we've had a big downtrend. Like people are not paying full attention to how far down we've actually gone. Even though we've had this rally, yes, we've still come down quite a bit. We've deleveraged a bunch. A bunch of that borrowed money that was in the system pumping things up is gone now. People went insolvent. People got wiped out. There's still bad credit in the system. Yes, there is still bad credit in the system, but a ton of it has been wiped out. So that's one problem that's out. Companies, even though they're laying people off, they're still working at a higher capacity than they were 6 months ago. So they're producing more than they were able to before, and people are still buying that. So for the time being, we still have a reason to go up or continue sideways, right? We still have some kind of support. It's not the apocalypse yet. Like you mentioned, apocalypse, it's possible, but listen, all right, I've been a big conspiracy guy for a long time, and then when I got into trading, some of that kind of went away because I realized that what's going on over time is a pump, right? In the long term, we have a pump. Yes, it's possible that we're going to crash, but as long as people believe in the system, it'll continue to go. It doesn't matter how crappy the system is. If people believe in it and they're okay using it, it's going to continue. And, like the Bitcoin predictions, the saying, the market's going to go down and we're going to have, it's going to crash and everybody's going to need Bitcoin. And that may be the case at some point. But for now, it still works, right? We're not the Weimar Republic yet. It's not the same thing. We're not there yet. We're the United States, or I guess I should say the Western world. The Western world is basically a superpower. And it hasn't hit a point where it's dwindled. Yes, it looks like it. We're very negative. The media is showing us stuff that makes you think it's worse than it is, but we're still fine for the time being. Like, it's very unlikely that we're going to have a massive crash. Like, every year I hear the next one's going to be bigger than 2008. The next one's going to be bigger than 2008. Well, look at this. This one was bigger than 2008. But what happened? What happened when we had that crash? We had the biggest bounce ever. There's a reaction to it because people know they can make money. There are people just waiting on the sidelines. There's so much negativity in the media that certain people think it's over. And the people that know that's basically a scam. That's basically like you're being catfished by the media to think that it's an apocalypse when it's not. The apocalypse, all right, we could say like there's going to be apocalypse someday. Yes, I agree. At some point, there's going to be some kind of a reckoning for everything that we're doing because we're not being wise with our money. We're not being smart with what we're doing with everything in finance. We have the ability to make things so much better than we actually do, but there are certain people that are greedy and they're taking so much that it's making it hard to actually do that. People are pumping up this system because of greed and corruption, and right now, that is the reason why I want to be long it. Right? If the system is rigged, if it's all rigged, I want to be on the side that benefits from that. They're not rigging it to the downside. If the whole thing is rigged, why rig it anywhere but up? If you're going to be in this for the long term, why would you rig it anywhere but up when you can just hold things and make money in the long term? That's how it's rigged. It's rigged to continue going up. So that's the one thing that all conspiracy people don't get. When we do go down, because I do think we're going to go down a little bit, we're going to bounce. All right. We're not going to keep going down and it's going to be the end and the dollar's going to go away and no, we still have real stuff. If you got rid of the financial system altogether right now, everything would still function. You'd still be able to get your food. You'd still have your place you live. You'd have your car. You'd have everything you need. We just wouldn't have a financial system. So the rigging is to the upside. It's a benefit it's a benefit to go long. How about Robert Kiyosaki? I saw a video for him the other day. He was like, oh, the system's rigged. You should never buy stocks because it's rigged. Like, no, that's exactly why I want to buy stocks. I want to benefit from this stuff. If it is rigged, I want them to boost my assets up too, right? Like, why would I want to fight people that know more than me, have more power and influence than me, and are rigging it in the way that it should be anyway? Like, if you're going to rig it to the upside. End of story. We're going up. All right, maybe we're going to drop, but we're not. It's not over. This Michael Burry stuff is not happening. All right, it's we're not going to. It's not going to need a bunch of prisons because everybody's homeless and we're all fighting. Like, no. There's probably going to be some stuff like that. Like every time there's a recession, there are definitely people that lose jobs, homes. Everything increase. Like homelessness increases, the suicide rate goes up. It's terrible every single time we do it. But what happens? We recover. Why? Because we're not just going to destroy everything. Right? When you're in a bad situation, yeah, you want things to burn, but if you find a way out, you'd rather just go out in the system that you have, like rather go up with the system than have to go out and go crazy. It's so much easier to just let everything benefit you. And it'll be tough for a while, but then you can continue to go. So what do you have down there? U.S., it's the only country to gain from this recession. Other countries will fall double hard. Yeah, well, that is another thing, too. The U.S. is definitely positioned to do better than a lot of the other countries. I mean, because we have, number one, the dollar is the reserve currency. Number two, it's just the power is already established across the world. And number three, we have momentum right now. But it doesn't mean that everyone's going to fall to zero. Like, things are going to go down, yes, but it's not going to zero. Market only goes up. You can't go below zero. Yeah, exactly. Exactly. The market is going to continue to go up. It's going to be a rough ride. There's going to be a lot of volatility. So we've basically bounced, and here's the other thing that's kind of interesting getting back to this chart. We bounced off the 200-week moving average. This blue line that I have my cursor on right here is the 200-week moving average. And that's actually where we bounced. You can see right here, a couple months ago, we hit that, and then we bounced, and we're going up to the 50 right now. We're kind of hitting that 50. We kind of hit an area in the standard deviation channel. It looks like, what is that, so this is the median right here. So we've got half a standard dev, one standard dev. Okay, so we bounced off of one standard deviation. We've got the 50-day moving average. We've got heavy volume right here. This is going to be an area that's going to be tough. So I can see it going slow or being really volatile in this area if it continues, but it's all riding on the CPI. Okay, that's the thing we're waiting for right now. The CPI on December 13th, that's about 2 weeks away, a week and a half, something like that. That's the thing we're waiting for, because if that tells us inflation is continuing to go in the right direction, the market's going to go insane, right? If inflation comes in really well, the market's going to have a nice rally. And I would imagine that Jerome Powell's going to come in and try to tamp it down a little bit. That's what I was thinking he was going to do last time, but he didn't. I mean, he didn't try to like pump it too much, but he really didn't. He didn't try to scare the market either. He was basically just being a little bit dovish, a little bit hawkish in places, and kind of wishy-washy, I guess, if you want to put it that way. So if he's wishy-washy and we have a good CPI report, this thing's going to explode. But we also have a tax loss season, right? We're still below where we started the year. It's very unlikely that it's just suddenly going to pump to new highs or the old highs. So it's more likely than not, since we have less than a month to the end of the year, we're going to finish down. And if we finish down, people are going to want to sell their losers so they can offset the gains on their winners. And we haven't had a good tax loss selling year since 2018. Now, that was actually a wonderful tax loss selling year. We had some problems with rates right before then. I mean, rates were going up faster than the market wanted them to. We also had the trade war that came in that year, so scared everybody, and the market was uncertain. And then right at the last minute, Jerome Powell was like, okay, we're not going to hike rates anymore. Sorry about that. In fact, we're even going to bring them down a little bit. And that made the market rally like crazy. That brought us into what we have today, because if you go back to that point, see, here was the 2018 crash, right? We crashed below a lot of the moving averages, the 50, the 100, all that. And then on Christmas, the day after Christmas is when this rally started. I remember, because before Christmas, I was looking at all this stuff and thinking like, oh man, this stuff's cheap. I remember there was one stock that I was looking at that was like 6 cents or something at the time. It was crazy. I mean, things went way, way down at this point. But then when Jerome Powell stopped raising, and then I think they even cut it a little bit at this point. I don't remember if they cut it there, if they cut it at another point, but they brought it. I think they cut it here. I'd have to. It's been a while, so I don't really remember. But that sent the market into this crazy uproar. And I remember every single week thinking, this is it, this is it, this is it, this is it. But look what happened the entire year. It got a little uncertain in the middle of the year, and it continued to go. See, this is what happens. People always, they see this, and they think, this finally, things are coming back to what they should be. They should be at these certain points based on reality, based on if you just base things the way they're supposed to be, and you don't let zombie companies be in there, and you don't let people have crazy amounts of credit, and you're responsible with your fractional reserve lending and all the stuff that we should be doing. If you base it on that, then everything's way too high. We're all out of whack. But the system is already like that. This has already happened. Right? We can't, basically, they can't really stop it now. They've opened the floodgates. In 2008, they opened the floodgates, and they can't really close them. It's hard to push those gates over a bunch of rushing water. Millions or billions or trillions of gallons of water flowing through an area. It's really hard to stop all of a sudden. It's the same with money. I mean, they unleashed a bunch of money here. This was when the repo thing started coming in, and they were dumping cash into the market like crazy. It was like billions of dollars a day. If you think about how much money was coming into the market every single one of these weeks, billions and billions of dollars. It was insane. The only thing that stopped it was the pandemic. But we still had that money in the system, right? And they brought rates lower, and they started buying junk bonds. So they basically supercharged the rally, and what we got was a pump. So they're finally squeezing things down a little bit. That's why I agree with you that we're going to go lower. So now I've been hyping the upside for a while. Now I need to hype the downside. So the Fed was the main reason that things started to go up like this in the first place, right? So the Fed is also the main reason why this is dropping. I mean, you can see right here when the Fed basically said, hey, we're going to start talking about this stuff that we haven't been talking about for a while. It scared the market into not going any higher, because this really was the peak. I mean, it did go up over that, but this right here is when people started to get scared. But we still had momentum, so things were changing hands, and a lot of the smart money was getting out. And the smart money, I hate that term, but the Fed also was getting out. They were like, oh, there's a conflict of interest, blah, 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 blah. They knew exactly what they were doing. They were getting out before they raised rates. And since they've been raising rates, we've been coming down. So what do you have here? Inflation in 2008 was half of what it is today? Yeah, exactly. This is not the real rally. It's a short squeeze. And the market dropped after inflation went away and the Fed pivoted. Yeah. Eventually the Fed's going to have to pivot here too, but the market's already rallied a lot. And here's the thing. They haven't said that they're going to pivot now. The media likes to speculate, and like whatever the Fed says, they just ignore it. And they go like, oh, well, this is what I think should happen, or what I want to happen, or blah, 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 blah. No, that's not what, see, that's the problem, is people think things are going to happen, not because the evidence says they're going to happen, but because they either want them to happen or they're afraid it's going to happen. You know, they think like, okay, I don't want this to happen, and it's not possible because I just don't think it is. That stuff usually happens. And that's what happened with this rally right here. People thought it was over, boom, it came back. People thought it was over, boom, it came back. People are thinking it's over here. Well, we're probably going to have another drop. We may not. I mean, we may take off from here. I really don't know. This has been insane. I got the Fed meeting completely, or I should say Jerome Powell's speech. I got Jerome Powell's speech completely wrong. You know, I had this nice FedEx, I had some FedEx leaps. I had some Alibaba leaps. I bought them way down here in the bottom. Like one of these weeks right in here, it was towards the bottom. I snagged those because they were super cheap. I've been holding them for a while. I didn't want to get rid of them, but I was thinking, man, if Jerome Powell tanks the market, if he tries to tamp things down a little bit, I don't want to continue to be in those because I'm already up quite a bit on those contracts. So I dumped them. And, of course, everything took off afterwards, and now I'm pissed off about that because those things would be up quite a bit more, especially Alibaba. My gosh. I dumped Alibaba before, I think I dumped Alibaba like 2 days before, and it had another pump like right after that. So it pumped right before Powell's speech, and then it pumped because of Powell's speech. So I missed out on a bunch of that. So that was pretty frustrating. I also had some stuff to the downside. I bought like very small amounts of some inverse SPY calls because I was thinking, all right, the market's going to go down and then these will go up when that happens. And of course that didn't happen. And they were YOLOs. It was like 3 days to expiration, the kind of thing that I say should never happen, or the kind of thing I say you should never buy. So that way when you do buy them, it's not that big of a deal when they go out. And I spent like $40 on them. Not even a big deal. So I thought these are probably going to get annihilated, but just in case we have a nice drop, I'd like to be able to collect a little something on these YOLOs. and they were worthless right away. So no big deal. I got rid of a couple of them. I saved like $12 of that 40, right? And I kept the rest, but they're all worthless now. So that was interesting. That was too bad. I'm hoping that we come down. So I would like it to drop a little bit, Future Space G. I'm really hoping that it actually does. So let's see. Tesla react to $167, 500 pre-split. We said at 400 we buy. So let's check out Tesla real quick. So I actually own some Tesla. I've been long it for a while now. I got it on the first dip. I'm a little bit underwater on that Tesla position, but I don't have much in there, which is too bad because I really would like to have some more. Because I was buying Tesla in here. So this was like right around the 200 or like the low 200s. I was buying it in there and it pumped up and I felt good for a while. And now it's way down here. So it's below my average and I've been kind of getting it a little bit. But Tesla has some issues right now. It's some potential selling from Elon Musk if things go badly. If he needs money for anything, most of his wealth is stuck in Tesla shares. So he's going to have to sell that in order to pay them. He's taken Twitter private, so we don't know what the financials of Twitter are going to be. Right now, the only thing we know is Twitter is having a record influx of people. So that's good for advertising, but a lot of advertisers have pulled out, so I don't know how that's going to affect things. He's also got the verification for $8, and I don't know if they're suspending that or what they're doing. There's so much volatility with Twitter right now that it's really hard to say what's going to go on. And if Elon Musk needs money for any other reason, Tesla is going to be the first thing that he goes to. So there's risk in Tesla. And I think a lot of investors are afraid of that, which I think not just the market going down, but I think the investor fear of Elon Musk selling big swaths of it has caused people to get rid of Tesla. I think as it goes down, I think it's a good buy. So you were pre-split, you were saying 400. I don't know what that is now because I forget where 400 was before that. But when basically every time it's been dropping, I've been buying like little bits of Tesla here, little bits of Tesla there. I really would like to have more, but I'm low on cash. I bought Amazon, I bought Facebook, I bought Tesla. I did except for Tesla, I did well on the other two. Amazon, I'm back. I might even be above Facebook. Facebook, I'm up because I bought right before they had that pump, and that moved my average down low enough just to get over it when it did pump. So Facebook, I'm back over my average. Amazon, I'm close to my average, but I'm still under because Amazon's down a little bit. Tesla, I'm under my average, but I really don't have very much Tesla at all. I wish I had more than I did. Let's take a look at Amazon real quick so we can just see where it's at. To me, that's another company that it's a no-brainer. I mean, it's gonna do well when the market pumps. Like that. See, that's what I'm looking for right now. I'm not looking for specifically these companies because these are the best companies. I'm looking for things that will do well when the indexes pump. When the indices are moving up and they're bringing everything else with it, which stocks benefit the most? Stocks like Amazon, Tesla, Apple. I mean, the big ones that are weighted heavily in these indexes, especially ones in the Qs, because the Qs are getting hammered the most right now. The NASDAQ is just getting destroyed because a lot of these layoffs are coming from the tech sector. The tech sector is the thing that's driving a lot of this. So the job strength is in other areas. I mean, the tech layoffs are coming because there was so much speculation. There's so many new companies and there's so many new positions. People were competing. They needed to hire a ton of people to keep up with the digital landscape. Now that things have come down a little bit, the digital landscape, the speculative digital landscape is not a good place to be. So that's the place that's getting hammered. But the necessary digital landscape is still doing well. Amazon Web Services, they're expanding right now. Everybody else is contracting, but Amazon is hiring more people to manage their web services platform because it's so important. I mean, everything runs on these. I mean, you need storage. If you're going to run any big tech platform, you're going to need a place to put it. If you don't have your own server, then you're going to have to rent space somewhere else. So it's probably going to be like Microsoft or Amazon or any of these companies. And that's what they're counting on. I mean, they want to get more into these because those are necessary. Regardless of what's popular, you need places to store, you need access to internet, and you need things to run. So those jobs are going to be safe, and those sectors are going to be safe as well. But right now, we're having this flux of everything, so it looks like the entire market is coming down. It's not the entire market. It's sections of the market. We're still doing, because every earnings season, they guide down, and we still do well. The companies do better than people think every single time because we're not going down. You know, that's why I say we're not going down. That's why you're being tricked, right? Like, look at this chart. Let's just look at Amazon over time. This is not a company that's going to zero anytime soon. Yes, we've dropped, but everything has. Amazon would still be up here or even higher if none of this had happened. They're just going to keep going because they're necessary. That's why I love them as a buy. They're at the median, right? So you can see these standard deviation lines that I have going across the chart right here. This middle one right here is the mean. This is where, based on the trading, the standard deviation line thinks the price should be, and it's really close to that. Let me zoom in a little bit so we can see. So to me, this is a nice buy because as the indexes pump in a bull market, it's going to go well above the mean. So below the mean or at the mean is a great place to buy. In fact, I actually didn't really notice this, but let me zoom in a little bit and look at that. The last few weeks, it's been riding the mean. Look at that. It's not really going below it. And then this area is important. One, because there's a huge section of volume right here. And two, because there's the standard deviation mean. And I think people are looking at that. Algos are looking at that. And where a lot of shares change hands, there's a lot of resistance. So a lot of people are long in this area. I mean, we've given up about half the gains that we got in that pump. Like, so where is the, let's see, actually, I'm going to back up a little bit more and take a look at where we're at. So the pandemic was here, and ever since, so we're basically back to where we were right at the end of the pandemic. So maybe it was a little bit lower. Yeah, I mean, this is all the people that got in right here are back to they're back to break even. And the thing is, most people are long much lower. So the point of control is way down here at like $3, $5. I mean, this is post-split, $3, $5. But think about that. Most people that own Amazon own it here in this massive zone of accumulation, well below the price that it's at right now. I mean, this thing can drop 50%. It could drop 70, 80%, and it would still be above where most people are in the stock. However, a lot of the newer people are long here. So we're looking at people that got in at the pandemic or maybe a little bit after the pandemic and are either at break even or they got in this mess and they're way down. But we're sitting at a place where it peaked multiple times, where the standard deviation line, here's half a standard deviation, it bounced off of it multiple times before it broke through. We've got the averages way above it. We've got this line right here. We're basically sitting at a point where it's kind of a do or die thing for Amazon. If Amazon breaks down, we could have some serious volatility and a serious drop from here. But right now, because it's at this place of strength, unless we have some bad news, I don't necessarily think it's going to drop. It depends upon the market. It depends, and that depends upon CPI. The main thing that we're worried about right now is the CPI report on the 13th. Whatever that says is going to dictate the rest of the year. If that looks good, then things are going to go crazy. If it looks okay, I'm not sure about that one. That could spook people because, we've had so much downward movement that people are kind of afraid right now. Like, that was the whole reason that I sold those FedEx contracts, because I was afraid of a drop. Let's go back to the SPY real quick just so I can get a better look at everything. So people are afraid, like me, that they're going to lose the gains that they've made in the past couple of months. It's been a rough year, and actually having some gains it's like a new thing for people. Every time we've had these pumps, they've gotten crushed quickly. This first pump was 3 weeks. So not even a month we were going down again. The second pump was even for about a month, and then it pumped for about, so we'll say a month and a half and a month and a half. So even for a month and a half, pumped for a month and a half, and then it crashed again. But now we've been pumping for a couple of months. I mean, the bottom of this was back here at the Fed meeting at the end of September. So we've been pumping since September. Yeah, we've had a bad week here and there, but look at every single time it bounces. So we're at this point where we're getting to some resistance. We've broken through this very light channel of volume right here. We're coming up on moving averages. We're coming up on standard deviation channels. We're coming up on previous highs. We're still at a lower high from each peak, and that's important. The people that are trading this kind of stuff, the technical analysis type people, are looking at this and thinking, if we don't get a higher high, this trend could continue, and it will most likely continue because people will be scared. Like, we had a lot of pressure going into this first uptrend, but now we're slowing down a little bit. It still looks good. I mean, a lot of this is because of the Jerome Powell speech, and the reason it was kind of flat before the speech is because they were waiting to see what he would say. If he was overly hawkish, they were getting ready to sell. But because he wasn't overly hawkish, they went all in and people got squeezed. And the shorts are doubling down every time. Like you were saying you're doing, that's the same thing a lot of people are doing because they're not paying attention to the fact that the fundamentals aren't as bad as we think. It's easy to think they are when you're getting into these rabbit hole videos. Robert Kiyosaki, Peter Schiff, you name it. Any of these people that, especially Michael Burry, they're gonna put an idea in your mind that things are worse than they are, which makes you think that you're right about the short. And maybe you are. Like I think, like I do agree with you that we're going to probably have another one of these kind of, bounce down triangle patterns right here. I don't think it's going to be as quick as these ones. I think it's probably going to last a little while because my guess is that we're going to peter out at some point. People are going to get nervous, and then a bad piece of news is going to pump it down. That's kind of what we need. We need something to come in and say, like, hey, there's a reason to go down. Because right now, like I said, an object in motion in space is going to continue in that same direction until something else acts upon it. And right now, we haven't had anything act upon it. In fact, we've had Jerome Powell extend it a little bit. So I don't know when we're gonna drop, if at all. My guess is probably, I'm guessing this CPI, like the last CPI I felt was going to be better than people expect. But now that we have higher expectations because of that, I don't know if this CPI is actually going to live up to those expectations. And then depending upon what Powell says the very next day could change all that, because we could get a great CPI reading and then Powell could come out and say something that crashes the market. So that's basically what we're waiting for. We're waiting for that. There's the PPI next week. There's consumer sentiment. Those are going to be important, but they're not going to be as important as the CPI. The PPI is going to tell us if the producers are still having a problem with inflation in the same way that consumers are. My guess is that it's going to be the same. If it's better for the consumers, I have a feeling it's going to be better for the producers, because whatever the consumers have to pay for that, like people have to make money on that. So if you can't effectively make money dropping your prices, then you're not going to drop prices. And prices have come down a little bit in most areas. Oil especially. Energy has come down a lot since, in fact, let's pull up crude real quick. Because it is a big driver of everything. I mean, the gas station by my house, I saw some, well, not by my place, but there was another gas station that dipped into the fours. And I'm in California in the United States, and that's one of the most expensive places to have gas in the United States because California has a bunch of taxes on gas. They have a bunch of regulations on gas that a lot of other states don't have. California is extremely progressive. They're looking more towards green energy. So that to the oil companies, that's not that good. But for our progress, that's a good thing, at least in my opinion. But that's still going to make things more expensive in the short term. So like a lot of these regulations, they mean well, but they don't always help. You know what I mean? So it's going to be difficult to deal with the fallout of these things. But for right now, it's just going to be more expensive in places like California. So if you look at crude, it's come down a little bit. We're kind of at crude is at a moving average. I think, what is this, the 100? So crude's at the 100-week moving average. The 200 is still well below it. It's actually at a half a standard deviation, or no, it's at the mean. So crude is at the mean as well. So crude could also pump depending upon what happens. See, that's the other thing is like the Russia thing's still going down. So there's a whole bunch of that. All right, what do we have here? So Tesla's down 51%, Apple's down 18%, CrowdStrike is down 37%, Lululemon's down less than 1%, Facebook is down 63%, and I love that. I got it at such a good time. Oh, I love Facebook. And I love the hate on Facebook. Please, everybody, keep hating on Facebook because it just makes it better for me to buy. I love it. Facebook is an ecosystem. It's not one thing. It's not just Facebook, right? It's not just Instagram. It's a bunch of things. And yeah, the metaverse is kind of stupid right now. It's funny to laugh at, but it's a good idea. They're not the only ones doing that. It's very useful to have a thing that you can just sit in your home and go to meetings. Like it's very useful to do this kind of stuff. It's funny looking now because they haven't quite gotten the tech up to the idea yet, but it's on the right direction. So to me, Facebook is making good decisions for the long term, but rough decisions for the short term. So yes, hate on Facebook. I love it. Absolutely love it. So Meta's down 63%, Netflix is down 46%, Amazon down 44%, Google's down 30%, Visa is down 1%, and Shopify is down 75%. Yeah, Shopify's been murdered this year. This is still a loot for many people and market makers. It's not the end of the tunnel. No, it's not. We've got a very interesting environment right now. I mean, invest $100K in Facebook in 2019 and find out it's worth basically nothing in 2022. It's not a happy situation. So yeah, if we're on here, let's go to Meta real quick. If we're talking about Meta, let's go to Meta. So in 2019, yeah, you're down below. See, that's what I was saying about a lot of this. We're down below these prices. Meta is still the same company it was back here. Nothing has changed except they've gotten a little bit wiser because they've had to deal with the metaverse a little bit more, the criticism of the metaverse. They're spending a bunch of money on it, and it's kind of just a money sink right now. Everything they spend on it is just going right into the toilet. So in the short term, it's very difficult to own Meta. It's actually one of the more difficult stocks to own, but man, did I time it right. Oh, look at this. I mean, we could still come down, but this right after earnings when it was down here, this is where I started really buying. Because like I started buying Meta like in here. I had such a tiny amount. I mean, it's barely even scratched the surface of what I wanted to put in here. But once I saw all this and then it tanked, I thought, oh, I got to add to it. So added right in here, brought my average to somewhere in this area, like right around 110, I think. Maybe a little less than 110, like 105. I don't really remember, but it's close to 100. So we're above that right now because of everything that's happened. I mean, they fired a bunch of people and they pumped because everybody was like, oh, they don't have as many employees, so that they're going to make more money because of that. So that was a nice little pump. And then the market has pumped it as well. I'm considering selling it, but I'd like to own Meta for the next pump, so I don't know. Right now it's like there's so few things that are up that I really, I don't know. Maybe I'll sell it. Maybe I won't. I'll just have to think about it some more. So let's see. You're saying question is, what is the real price? Was it just a temporary squeeze or is this a temporary drop? Because people are sure we're going to go back up soon, and I don't think so. What if the Fed canceled those $8 trillion liquidity back to $3 trillion? What are you talking about? The Fed canceling eight? Are you talking about like the mortgage-backed securities and the treasuries and things like that, or are you talking about the money printing, or what are we talking about here with the $8 trillion down to $3 trillion? Because that's the other thing. The Fed, this is a new summary of economic projections, so we're going to get more information from this Fed meeting than we got from the last Fed meeting. So things really could move. And what the Fed says, that what you said right there is, you're not sure if we're going to go down or up, and what if the Fed cancels things. That's important, because if the Fed comes out and says things that are extremely bearish, then the market is going to have, people are going to have a fit, because we're up right now. We're up at a point we haven't been at for a while. And I mean, it's been such a painful year that people don't want to lose their gains. So they have itchy trigger fingers. They're ready to sell at a moment's notice. We could have a massive panic very quickly because of that. That's you have to think about the psychology of people. And the psychology right now is they're jittery. They're nervous. They're happy that they're up, but they haven't seen gains in a while. So they're thinking, should I take the gains or should I keep going? Exactly what I did. I took some of my gains and I wish I hadn't, but I'm not going to FOMO myself back in. I could have bought in on that dip on Friday. I almost did, but I thought like, I just need to let this thing go because we've gone up so much that I don't want to get caught in a bull trap right at the top, because it's kind of looking like we're close to the top right now. And, you're talking about the M1 money supply. Okay. I mean, they could, and their goal is actually to pull as much of the money out of the system as possible. And that's what these defaults are doing. That's what the higher interest rates are causing. Number one, loans to be repaid. Loans are more expensive now, especially the people that had adjustable rate loans. They're hurting like crazy. So a lot of their money is being pulled out of the system. So a lot of the people that looked at the continuing rising market last year and said, oh man, I need to get in on this. I need to borrow some money because everything just keeps going up and I don't want to miss that. They were getting loans that they didn't even pay attention to. Like, is this adjustable? I don't know. I'm just going to keep going. They're just going with the flow. And at the time they were right. But now that things are coming to fruition, it's kind of a reckoning day. They're getting stomped on, All right, we got another chart here from the Master Future Space G. Oh, yeah, looking at this chart, I know what you're talking about. All right, let's bring this over here. Take a look at this real quick. So, yeah, the M1 money supply, we had that massive pump. So you're basically saying if we drop this all the way down to like 3, then that's going to be destructive for the markets. Yeah, it will. And the Fed wants to bring this down. Like, this is insane right here. I mean, if you look at going back to 1959, it's almost a straight line until you get, number one, to the great financial crisis when they really started to do it. And then 2, the pandemic. Boom! Look at that. That's insane. And look at how much we've already taken off the market. So we've basically removed, what is that? 1 trillion? Almost 1 trillion, like not quite a trillion, but we'll just call it 1 trillion for now. I mean, that's a decent amount of money to just come out in this short of amount of time with the fundamentals we still have. So it is, it is possible that they could just dump a lot of that. But I mean, a lot of that money's in the system too. I mean, well, that's M1, so it's a little bit different than the M2. But what I'm thinking is it's going to be more gradual. They don't want to crash it right away. The Fed is trying. They're still going for a soft landing. They thought that they weren't going to be able to, but now that things are looking a little bit better on the inflation front, they're back to saying that they can do a soft landing, maybe a quote soft-ish landing. I don't know. We'll see what happens with that. But right now it's all about rhetoric. It's all about what people believe. So let's see what you got here. Future Space G. That's the problem with buying Facebook. I don't think we'll see any new high for a long time, many, many years. A new high in 5 years, maybe. Well, yeah, that's the thing. The metaverse is going to take a very long time to figure out. I mean, there's going to be more and more competition, and especially as the crypto market comes back, because a lot of that people associate that kind of thing with crypto too. So part of the reason people aren't in it is because crypto's been doing terribly as well. So some of it's because the technology's weird. They haven't quite got it yet. It's expensive. Like the metaverse, you have to buy Oculus, which is like $1,500. So not everybody wants to lay down $1,500 to get some goggles so that they can look at their like Wii avatar in some stupid world with terrible graphics. But eventually it's going to be cheaper. It's going to be easier to get in, and people are going to want to do that once they improve the technology a little bit more. I think businesses are going to want that, especially the work from home type businesses, because right now we're at a point where a lot of businesses realize people don't have to be in the office. I mean, it's easier when people are in the office because then you can just collaborate with people. You can talk to them directly. When you're at home and you have to tell your employees what to do over like an email or whatever, you can't see their face, right? It's easier for employees to just like not do something and be like, "Oh, I didn't see the email," So people want their employees to be in person so that there's a lot more I don't know, accountability or whatever you want to say it is, a lot more pressure, a lot more peer pressure, because then they can go in and look you in the eye, and like when somebody's looking you in the eye and talking to you, it's a whole different feel than if they're talking to you over chat or over the phone or over email or whatever it is. It's a totally different thing. So a lot of these employers want to be able to like intimidate their employees into doing stuff, basically. I mean, it's a terrible way to put it, but it's kind of true. So, but the whole point is about the work from home thing. There are a lot of businesses that can do it, and Metaverse is going to be extremely useful for that, because then you can meet people with avatars. So it's kind of like in between. It's better than chat because you have some kind of a physical avatar. You actually see people, but it's still not actually looking someone in the eyes, because there's like a physiological reaction you have when you look at somebody. When you recognize a face, when your physiology, like your lizard brain, the parts of you that are very, very old compared to the upper brain functions, the stuff that reacts quicker than your upper brain functions, that stuff, like your lizard brain and the person you're talking to's lizard brain are interacting and reacting so quickly you don't even notice it. I mean, there's a whole lot going on that behind the scenes that you don't even feel or you don't even notice until you're already in there. Like when people get agitated, it's like they're saying things that are nice, but they're getting more and more agitated. It's because their body language is triggering the physiology, and the physiology is reacting to a threat. Now, the words may not be saying anything threatening, but the subconscious stuff, the body language, that is being picked up because that your lizard brain, it's been tuned for billions of years. It knows when there's a threat. It's very sensitive to that kind of stuff, and your upper brain functions don't have time to react in the same kind of way. So the lizard brain, basically, number one, it has authority over everything else, because emotion can override you. Emotion can basically cut out any logic if it wants to. If you get upset enough, right? You get happy enough, you get sad enough, whatever. Pick your emotion. If it's intense enough, it will override logic. And being at home, being away from people, is a way to kind of put a wall in between your physiology and theirs. That way you're not reacting to stuff. But the other thing is, you might react, if it's just text or something, you might react differently because you're going to read that text the way you interpret it, not the way they meant to say it. So it's kind of a double-edged sword. It's like, on one hand, you don't have the intimidation factor and things like that, but on the other hand, it's so much easier to misinterpret what people are saying because all you're seeing is the text and not the intention behind it. So yeah, metaverse, like, it's going to be a while. Yeah, okay, here's the thing. 5 years, I think it's going to be sooner than that. As soon as the market pumps, Facebook is going to go with it. It's heavily weighted in the indexes. It still has a bunch of cash. It's got, how many users does Facebook have? All right. Like, you can think like, oh, Facebook, everybody's a loser that's on there. It's not cool anymore. Guess what? Everybody's still on Facebook, right? Facebook has like 3 billion plus users. And I talk to people all the time. And it's funny that like a lot of people will not have any other social media but Facebook. And I was thinking, okay, that's got to be an age thing. Like, millennials and Gen X and everybody above that, they'll have a Facebook because they were in the era that Facebook was the most popular. But like Gen Z probably isn't going to have a Facebook. They're going to have everything else. Nope. A lot of Gen Z has a Facebook too, right? They might be using TikTok and other things more, but they still have a Facebook. And it makes sense because everybody else, like if you're going to keep in touch with your grandma, she's not going to be on Snapchat. All right. Your grandma's not going to be on TikTok doing some dumb dance. Your grandma's going to be on Facebook. So that's why you still want to have Facebook. It's like maybe your classmates or your friends, if you're younger, don't have a Facebook, or they think it's stupid to have a Facebook. Nobody has Facebook anymore. But you're still going to have it to talk to your family. You're just not going to use as much. Your main thing is just going to be TikTok until that gets shut down for whatever reason. Because TikTok will probably get blown up at some point. Everything I hear, it's always the same thing. Like, it's a spy software from China, so it's good. Like, yeah, it is. Of course it is. Like, every country that makes something probably has some nefarious stuff in there. Like, I would bet a lot of the American companies have the same kind of thing going on for other places. But there are different regulations in the West and in like Russia and in China and things like that. So it may not be exactly the same. And also a lot of it is propaganda. Like, yeah, I'm sure TikTok does kind of collect data and sends it back to ByteDance, which has a stake in the Chinese Communist government. Yes, for sure. But like, what data and how much, right? Is it really going to be what people think it is? Like, are they breaking into every little thing? Like, I don't know, man. Like, maybe, who knows? It's just, some of that's just fear mongering, because the thing is, it's a popular app, right? It's what Vine tried to be years ago, but the people weren't ready for that because they didn't quite have the technology to do it. Now, smartphone, when Vine came out, smartphones weren't as saturated in the market as they are today. Like, I think, when did I get a smartphone? I think my first actual smartphone was sometime in the 2010s. I had like semi-smartphones in the 2010, 2009, somewhere around there. But it was, because the iPhone came out in like 2007 or something like that, maybe 2006. I really don't remember, and it took a little while because it was just the iPhone for a while. Android wasn't a thing yet, and then Android comes along, and then people start to adopt it slowly. And then by the time you're getting to like 2012, 2013, that's when I think, I would say like 2013, 2014 is about when I had 2015. Yeah, that's when I had my first like legitimate smartphone. Before that, I had like a hybrid one with one of those keyboards that kind of like kicks out the bottom. They don't really do those anymore. But that was actually really nice because it fit my fingers better, and I didn't accidentally hit stuff on the screen and stuff like that. So I really liked those. But it's a mechanical thing, and smartphones were just cooler, so that's what ended up taking over. So yeah, so the 2010s was when people finally, like most people, had a smartphone at that point. So that was when stuff like Vine would have been better. But by that time, by like 2015, 2016, I think Vine was like either on its way out or completely out by that point. So now that everybody has that, we have a new generation of people that grew up with social media from the time they were babies. We've got TikTok going, and that's the way it's like. It's so simple. Like, you just have videos and you scroll through videos, right? That's one thing TikTok has over YouTube is the ads. You can just skip an ad on TikTok. If you scroll down and you hit an ad, you can keep scrolling. There's no wait. YouTube forces you to watch an ad. You can hit skip after 5 seconds on some ads, but not all ads. But even if you can hit skip, you still have to watch it for those 5 seconds, which, even though it's 5 seconds, it's like gruelingly painful sometimes. I don't know what that is. Like, 5 seconds, it's not a big deal, but man, when I see that and I can't skip it right away, I'm just like, oh gosh, what's going on? I'm going to die. It's not a big deal, but for whatever reason, it feels like I'm going to die. So we had Netscape. Yeah, Netscape. I had Netscape, AOL Instant Messenger, MSN Messenger. Nah, you were only cool if you were on AOL. If you were on MSN, then you were a dweeb. It was all about AOL at the time. Which, like, I never had AOL Internet Service, but man, did I have AOL Instant Messenger. All my friends did. That was what we did way back in the day. It was cool. So with all the internet users ever, they still disappeared. You never know how Facebook may just become insolvent. That's a good point. So yes, this whole endeavor could actually end up costing them way more than people expect. I don't think that's going to be the case because Facebook has been around for long enough that, like, they're not dumb. They have a lot of really solid people on their board. They even though they're firing a bunch of their staff, they still have a lot of really good people there too. I just don't see that. I see that as very much less likely than them doing well. Based on the whole chart of the market again. In fact, let's look at Meta. Let's just back up on Meta and take a look at that. Just based on Meta, look at how smooth this uptrend was. Right? When they came out, they went down for a couple of years, which happens to most social media companies. When they go public, everybody thinks like, oh, they're over now. It's public, so it's going to be crap. But look at what happened. Eventually, it had this little pump right here. When was that? That was way back in 2013, the end of 2013, and they just never looked back. Yeah, there was some hesitation along the way, but look at where they were bouncing off of. It bounced off of this half standard deviation mark, up and down, and then it came back to the mean. Like, this is a beautifully laid out stock up until here. Now it gets really crazy, but look at like how low it is. I mean, yeah, they're sinking a bunch of money into the metaverse, but there are a couple of options for metaverse. All right, so there are three possibilities with metaverse. Number one, it doesn't work. It's stupid. They wasted a whole bunch of money, and that's it. At some point, if that's the case, if they decide, all right, this isn't going to work, we've sunk all this money into it, we don't foresee any reason to keep going on it because it doesn't look like it's going to do anything, then they dump the whole project, and they're still Facebook, Oculus, Instagram, WhatsApp, etc. There's still the ecosystem for all this stuff. So if they don't have the metaverse, they still have a bunch of other really successful platforms, right? But if there's another possibility is the metaverse is just okay. They don't really get anything crazy going, but maybe they make a little bit. Okay, then there's that. And then there's the possibility that the metaverse is awesome and that it actually is extremely profitable. So there are two scenarios, actually three scenarios in which it doesn't crash. But there's a fourth scenario where the competition outweighs them. They spend too much on metaverse. They go in too heavy and it really is bad. Then it crashes. So three possibilities to the upside or sideways and one possibility to the downside. So that's the thing you got to look at right there. It could crash. Yes, but it has more possibilities, or I should say like the possibility of it going up is higher because of that. Because they already have well-established products that even if the metaverse doesn't work, they can still continue to use. I mean, Facebook takes so much money in from advertising because so many people are on there, advertising works, right? And like my parents buy stuff on Facebook all the time. Like I go over there and they're like, oh, I got this blanket on Facebook or whatever. I got this little stool or this little knickknack on Facebook because they were just scrolling. They saw an advertisement like, oh, that looks cool. And they bought it. I mean, the same thing happens with a lot of people. That's basically every social media platform now. Yes, I know. But Facebook works. Like I've never bought anything that came up on YouTube, right? There's like, I see ads all the time. Sometimes I've seen some stuff. They're like, oh, that's kind of cool. That looks a little interesting. But most of the time I'm like, skip the ad. I never thought about it. On Facebook, there have been a few times where I was like, oh, that would actually be kind of useful. So their advertising game is extremely strong. Like, okay, maybe here's another scenario. A bunch of users leave Facebook and Instagram for something better, or they just decide that social media is stupid and they don't want to do it anymore. Yeah, that could really hurt them, right? So if they're spending a whole bunch and they're losing users, they're gonna come to a crunch time where they have to choose between whether they want to keep forking out this money or they want to strengthen up the businesses that are still working. So yeah, it could go down, but I think it's way more likely to go up. And the fact that it's so low right now, part of it because of its own problems, but another part of it because of the market in general, I think it's a good chance to actually buy for the future. I mean, we're down at is this what, 2 standard deviations? Yeah, we bounced off of around 2 standard deviations down. So to me, I mean, the median is way back up here where there are a decent amount of people long. So the median is up at like 275 right now. And we're sitting down here at 123, 125, right? So we're less than half of what the median should be, which is why I think it's a decent place to buy if the market goes up. So a lot of ifs have to happen for Facebook to crash. If Facebook, all right, here's another scenario. Let's just say Facebook doesn't do anything. They just do exactly what they've been doing and nothing changes. If the market pumps, it will bring them up with it. They are down because the market is down. Crypto is down because the market is down. All the good stocks are down because the market is down. And the bad stocks are down because the market is down and they're bad stocks. So you have to weigh like, what's going to happen to these stocks when we have another pump? Because we're going to have a pump. All right, it's very unlikely that we won't have a pump because if you look back through the history of the stock market, what happens? So yeah, we go back decades, right? We go back a really long time. What happens? Up, 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 up. Do you want to bet against this? Do you really want to bet against something that's been going up for 100 years? Look at that. I mean, it's not quite 100 years because, I mean, where's the point where it really starts to go up? So in the 40s, right? All right. So right around World War II. Okay. So almost 100 years. We'll say 80 years, right? 1942. Yeah, that's 80 years ago. So for the past 80 years, this thing has just continued to go up. It's just up, up, up. Yeah, we have some downs for a while. And like, look at, there's some big downs in the 70s. We had inflation. So there's kind of a parallel to what we've been seeing right there. The 70s. In fact, the 70s had these spikes that kind of look like what we've seen so far in the market. And that makes sense because we have a lot of the same problems, but they're kind of different. I mean, interest rates are nowhere near what they were in the 70s. By the time we got to like 1980, interest rates are at their highest level ever. So we're still way, way below that. And I mean, we had a fuel issue, we have inflation, we have all these different things that's going on. That's exactly what was going on in the 70s, but not exactly. It's the same kind of stuff, but modernized, I guess. But the point is, look, it's been going up, it's been going up, it's been going up, it's been going up. And yes, I get it. Past performance is not a guarantee of future results. I get it, yes. But from the most part, for 80 straight years, it has been. I mean, we spent 10 years kind of going sideways from the dot-com crash, but then what happened? They turned on the money spigot. And here's the other thing, too. So, yeah, the powers that be rigged the system, and they turned on the money spigot. They turned on the helicopter money, right? Do you think they're going to turn it off? Why would they turn it off? If it's working, regardless of how damaging it is to the actual fundamental system, if it's working, why would they stop doing it? If it's rigged, why would they rig it against themselves? They want to benefit from this whole thing. So there's just no, like, we have a drop, we have an opportunity. It's probably going to bounce. People always think it's not. Right here, oh, dang, I really zoomed in on that. In the 2008 financial crisis, people thought the world was going to be over. Right here, they thought this was it, and it wasn't it. People were in denial, especially when it came back up to its previous highs. Like, look at all the volatility that you got around here, around 2013, 2012. I mean, once it got to its old highs, people didn't believe it. They got squeezed out. You can see these like huge green sets right here. There's like two or three straight months of green, 2 months of green right here. Those are squeezes, and those are at important levels. I mean, they're by standard deviation levels. They're above the averages. They're getting close to the old highs. So this was a prime area for shorts to really, really go in and provide the fuel. Like the reason everything is so negative is because the system is rigged to get fuel from the short sellers. The short sellers are right in these periods. Like, they're only right once in a while, and they're only right for a very short amount of time. Like, if you've been short the whole year, you're still technically up. I mean, you might not be because you're paying fees on that. There's also just the fact that it's going to cost money to short, and you're paying money for the margin, you're paying money for the shares, so maybe you're not up. But if you're like a giant hedge fund and you just decided to go short or to buy, maybe you went the derivatives route, which is a much better route than trying to short shares if you have a ton of money. So maybe they went the derivative route and they're still up. You're not usually up as a bear for very long. Most of a bear's life is saying, no, this isn't happening. No, this isn't happening. No, this isn't happening. No, see, I told you. He's like, no, it's not happening. No, it's not happening. I told you. God damn it. See, I told you. God damn it. See, I told you. God damn it. It's not happening. It's not happening. So that's what it's like to be a short. I think that's just the whole thing. Is like everything's so negative. If you look at any news story outside of the market, it's negative, negative, negative. That's what they want. They want you to have a negative mindset. One, because it makes you more susceptible to advertising, and two, because it's very easy to manipulate you into thinking that everything's going to end. It's not going to end. Why would it end? There's no reason for it. I mean, there's still goods. There's still goods going around. Like, yeah, it's going to slow down a little bit, but people have been saying the store shelves are going to be empty for a long time. They have not been empty ever. There have been times where it's been down a little bit, but I have not gone to a store and been like, wow, everything's empty. Like, no, the shipping problem is back on. We've got plenty of people shipping food, shipping items. Like, it's not going to happen. All right. We're going to drop a little bit, most likely, and then we're going to bounce would be my prediction. Anything could happen. I don't like making definitive predictions, but it's very likely that we're just going to keep going. I mean, because that's what we've done for 80 straight years. So I'm using this as an opportunity to the upside, because last time this happened, I was chasing this and it felt awful. This is the worst thing to be on the sidelines for, right? Like, I nailed this drop right here because I was lucky, not because I was smart. I would think I was smart, but no, it was because I was lucky. But I didn't capitalize on it as much as I thought because I didn't expect it to be this bad. Everything I had seen before that always bounced before this time. So this caught me off guard. But then the reaction to that also caught me off guard because I thought, if it's this bad, there's no way this can happen. Well, it does. It's not this one we're having now isn't as quick, but it's the same kind of thing. It always happens before people are ready. So I think the shorts are going to have one more leg. My guess would be, as long as things continue on this path, like we have to see what inflation says, but my guess is the shorts are going to have one more leg of success. And then we're going to have the bounce that starts the next bull rally, as long as things stay the way they are. especially if like the Ukraine situation finally quits out, which I don't know when that's ever going to happen. Like it will at some point, but who knows? Like if that just suddenly happens, I mean, that's because like it's hard for it to make the market worse, because the market already priced in the Ukraine thing, right? The market is priced in inflation as it is seen right now. The market is priced in earnings as they have seen right now, and the market is priced in the economic data as it is seen right now. So there's not really anything to drive it lower until we get something new. So if you're a short, you're gambling on something new. So, and you never know when or if something new is going to happen. But if you're a long, you're gambling on real data right now. So to me, it's better to be towards the long side because of that. Now, I could be wrong, obviously. I mean, we could get absolutely destroyed on a moment's notice, but that will be because of new stuff. So as like I said before, an object in motion stays in motion until something acts upon it. And right now, nothing has acted upon it. But we have binary events. We have the PPI coming up next week, and then we have an even more important CPI coming up the week after that. And that's the one I'm waiting for, because I want to see what that CPI says. I'm going to try to get back into those contracts. I'm hoping we have some downward movement before that happens, but I don't know if we will. That's the kind of thing that I'm uncertain about right now, is the fact that there's still so much uncertainty for these last few data points that who knows what's actually going to happen. So that's basically my philosophy right now. I think that we're going to have a little bit more pump until we finally have something that crushes it to the downside because of the realities of what's going on with the market. Well, I should say with the economy, with layoffs, with things like that. The problem is a lot of these layoffs that are happening in certain sectors are just providing workers for the other sectors that have a tight labor market still. So we're going to, that's unemployment. That's another thing that's coming up. So CPI and unemployment, to me, are two of the most important numbers that we're going to look at before the Fed comes out. We just had PCE. The personal consumption expenditures showed that savings are down a little bit, but spending is up. Incomes are up. So people are making more money and they're buying more stuff. We also have a lot of credit. So there's just money flying around the system right now. And it also tells me that people are being irresponsible as well. What is it? CPI, Fed rate, OPEX, cool days that week. Let's see. Because looking at history, we're still top. Yeah, I know, right? That's what we're going at right now. We're still way up in the top. But yeah, that's what we're waiting for. We're waiting for the CPI. We're waiting for the Fed. So are you talking about OPEX as an option expiration? Because I didn't put that on the list. I need to put that on the list. Yes, we have quadruple witching coming up too. So we've got the Fed, we've got CPI, we've got unemployment, we've got the end of the year, we got Santa Claus rally, we've got quadruple witching, and we have something else that I'm forgetting right now. We finished earnings season, so we're kind of just done with that. So there are just so many things that we have coming up. In fact, I should probably check my notes. Unemployment on 12/6, so that's coming up very soon. The PPI and the University of Michigan Consumer Sentiment, that's coming up on the 9th, so both of those are next week. Then we have the CPI on the 13th, Fed on the 14th. We've got post-Xmas rally and end-of-year move. We've got that coming up, so that would be like the tax loss selling thing and the Santa Claus rally. And then we've got the option expiration. So I've got to throw that on there too, just so that we know. Because the option expiration at the end of the year is the crazy one, especially since we're on a down year. Let's see. So the third Friday would be the 16th. Yeah, that would be the option expiration. So right after the Fed. Ugh, that's going to be rough. That is going to be a rough week. That whole week, we got CPI, then Fed, then quadruple witching. Are you kidding me? Oh, man, I'm not ready for that. I don't know if my blood pressure is going to be able to take that, because that's going to be intense, dude. 30 December is quarterly option expiration, and 16th is monthly option expiration. Oh, yeah, quarterlies. It's just yellow. That's why I didn't notice that. Man, what's the volume compared to the monthly? I bet the monthly has. Yeah, it's still, the quarterlies don't have as much volume as the monthlies. That is insane. I mean, the monthly's like 32,000, 26,000, 20,000, 55,000, like 30,000. That's just insane right here. There's 94,000 on the 2990 strike. My gosh. It's almost 100,000 trades right there. That's all open interest. Like the volume of that is still high too. So yeah, that's insane, man. The 16th. So the 30th, what day is the 30th? That's a Friday. That's like the last Friday of the month. Yeah, that'll be an interesting day. See, okay, so that's going to be interesting. So that's the week after Christmas. I was wondering about a Santa Claus rally, because the last time that we had a tax loss selling year, we had a Santa Claus rally because people were thinking that was the time to buy stocks, which it was. It was definitely the time to buy stocks. I mean, if you bought stocks at that time, you're still up. You're way, way up. What do you got? 50K. You got 50K contracts. Look at Future Space G balling out right here. By the way, if you're on Twitter, I'm on Twitter. So yeah, it is Astocalypse Now. So twitter.com/Astocalypse Now. All the links are in the thing. Come and follow me. I'll follow you back on there. We can share. I check Twitter once in a while. I've been trying to get more active with the social media pages, but it'd be nice to be able to see some stuff that I actually know is good. Like your Future Space G, the stuff that you look at is usually decent. You fish through a lot of the stuff for me and then show me the cool stuff. So I appreciate that, and I'd like to see more of that. So yeah, if you can follow me on Twitter, that'd be great. I'd like to see what you're posting. I'll write some terrible comments and stuff too, and make fun of you for doing different things than me. How about that? No, I'm not going to do that. See, their contract size is big. We're at 4,100. Not good for them. Well, yeah, on the short side, but they also had some long contracts too, and those are the hedges. Who knows what their actual positions are? So maybe they get burned on those. Maybe they don't. I really don't know. So yeah, interesting stuff. We've got a lot of stuff coming up that week. So next week's going to be there's going to be a little volatile, but the week after that, that'll be intense. So I'm going to be streaming that Fed meeting live. It's going to be Wednesday, the 14th. I'll be starting at 11 a.m. Pacific time. I'll probably be going until like 12:30. Well, more than 12. It'll be like 12:30 at the earliest, I would say, depending upon it also depends upon how well I do. If I get crushed again, I'm going to be pissed and maybe I'll stop the stream early. I don't know. But last time I got crushed and I talked forever about how I got crushed and how much pain I was in. That was rough. That was my first loss on a Fed meeting of the year, so I knew it was bound to happen. It's just kind of the way it is sometimes. So yeah, so we've got an interesting couple of weeks. I'm going to be keeping my eye out for the CPI and this Fed meeting because, this is going to dictate everything right here. What we're looking for is the Fed, we already know the Fed's going to increase their summary of economic projections for the rates, for the interest rates. They were saying before that the interest rates are going to be like 4%, something like that. Now we're predicting probably about 5%. Or no, it was like 4.5% to 5% was the range. So it'll probably be like 5 to 5.5 or something. I don't know, whatever it is going to be. Right now, it's most likely going to be a 50 basis point hike. They're thinking that it's time to start dropping the intensity of that, even though they're still going up. And then they're going to pause. So there's not going to be a pivot unless we have a really, really big problem. Unless we have some systemic risk, the Fed is not going to pivot. So I hear pivot talk all the time, and it's like, why are you still talking about a pivot? They already told you they're not going to pivot. They're going to get to a point and then they're going to pause for a while because they need to let this stuff work. If they pivot, all of their work is for nothing. All of this pain we went through is for nothing. Money will enter the system too quickly if they pivot. So they need to squeeze it out. It's like you wring out a towel, right? So you wring out the towel and then you get to a point where you've wrung most of the water out, but there's still some in there. And the way you get that out is you just squeeze it a little bit harder and then you hold it. And you let that kind of ooze out. That's what they're doing to the system right now. They've squeezed a bunch of the water out, and they just need to squeeze a little more and then hold it there to let it drip out so that when they unwind the towel, it's dry again. That's kind of what they're looking at. But for now, Tesla, yeah, it's going to get hit a little bit, but it could rise with the market. If we end up having a bull market, it's going to go. Like the rising tide is going to lift the good stocks. Tesla's still a good stock. Amazon's a good stock. Even though people hate it, Meta is a good stock. They're all going to move with the market, and they're highly weighted to the indexes, so they're going to move quickly because of that. I'm basically positioned with leaps to be long if we get a nice bull run. I do have some hedges to the downside just in case we drop, but I'm not going too heavily with that right now until we get to the point. Like once we get to the CPI, I think I'm going to up everything a little bit. I'm going to push my hedges up a little bit, and then I'm going to push my longs up even more because I expect volatility to follow this CPI report regardless of what it says. Whether we go up, down, or sideways, I have a feeling there's going to be some huge shots that end up correcting themselves because there's just so much craziness right now. It's been an interesting couple of weeks. I made some money, but I could have made a lot more because I dumped out before this last little pump here. So my goal right now is to buy back those Alibabas and Federal Expresses that I let go the other day because I'm really, really unhappy about that. Those were two of my best trades, but I still have some other trades. I'm still long in a bunch of other ways. I still have some shorts. I'm ready to go. I've got some Rite Aid shorts that are up right now. I'm kind of thinking about dumping them because if we have a pump, Rite Aid's going to go. So I might take I have two different sets of Rite Aid shorts. One of them is not, it's down, because it's too far below where it should be. But the other one is in the money. I think I have some like 6 or 7s, and Rite Aid is at 5 right now. And I've got puts, long puts in that. So I might just dump those because they're up a little bit. But I want to keep stuff that protects me in case the market continues to go down. Because right now I'm more weighted to the upside because I think the sentiment is more towards the upside. But any little thing could push it to the downside. So I'm going to get out of here. It's been an interesting couple of weeks. My next stream is going to be on the 14th. Like I said, that's a Wednesday. It's going to be 11 a.m. in the morning. I'm going to be ready, hopefully, to trade the Fed, but I don't know. We'll see what happens. I'm a little bit nervous because of the last meeting, so I don't really know if I'm gonna make a trade or not. I always say that, and then I end up making a trade. So we'll see what happens for there. So it's been an interesting week. I hope everybody's staying safe. Future Space G, I appreciate you coming back and checking it out again. It's good to have you back. Sorry you're so underwater on this. You know, I know it's been rough. Like, I almost got short many, many times, but something in my gut just told me that, like, people expect this to go down, and there's fundamental reasons for it to go up. So I think my gut says it's going to go up. And I trust my gut a lot more than my mind now, because my gut has been right way more than my mind. My mind overthinks stuff, and it's wrong all the time, but my gut is like, 60, 70% accuracy, which when you're investing or trading, that's not bad. Anything over 50% is good. As long as you're winning more than you're losing, then that's great. And this year, this has been my best year ever. I mean, with the exception of how far down my long portfolio is and my cannabis trade, or my cannabis investment, most of the trades that I've made, I would say like 80% of the trades I've made this year have been winners, and that's been amazing. So it's good to have a good year, because last year was terrible and I got absolutely hammered, but there's still a chance that things go wrong. I mean, there's enough time left that, I could get blown out on some of these trades. I'm probably not going to go big enough to do that, but it could happen. So I'm just going to try to be careful. So I'm going to get out of here. My name's Astocalypse. I do this every other Sunday at 3 p.m. Pacific. I appreciate you hanging out with me on this Sunday. Hopefully everybody's staying safe. And most of all, let's make some money! Woo! Good night.